Hey guys, today we're going to talk about leveraging the credit that you do have in order to improve your scores and help you buy a house. So, here we go. So in my last video, I talked about what kind of credit you should have that actually helps your credit scores when you're trying to really establish credit. If you don't even have any credit and you're just trying to get something. I discussed that in my previous video. I'll leave a link to it at the end of this video. Make it easy reference for anybody who would like to start there. So this is kind of a part 2 to that video. Something I didn't mention was how to utilize a secured credit card or how to utilize a new credit account to actually improve your scores. So when it comes to credit, there's this thing called utilization. So it's however much credit you have access to versus how much of that credit you actually use. To make it simple, let's say you have a credit limit of $1,000, okay, and you have a $990 balance on that card. So you're at about 99% of your utilization. You're almost max out on that card. And because you can even go over your max, and that hurts your credit too. But being really close to your max hurts your credit. So when it comes to your scores, the credit bureaus are going to be ranking your individual credit lines based on how much of each one of those credit lines you're actually using. So the cool thing about this is that if you already have credit, let's say you've got 10 different credit cards, and you're like, man, I really want to buy a house, but I have all this debt. I don't know if it's going to pan out. Well, in terms of your debt to income, you've got to figure that out. But if you have credit accounts and you're trying to get your scores up, there is something you can use those credit accounts for that will help you do that. And that's not just paying them off. Maybe if you have 10 of them, you might pay off a couple of them and that could help. But it's also utilizing them in such a way that they're going to give you the best scores per trade line. They're going to be scored the best for you. One of the ways to do that is how much of that percentage that you're utilizing that credit line. So something that I've seen with lots of clients, and by the way, I'm a mortgage lender, so I've seen lots of credit reports. I've helped lots of people improve their credit with just little tweaks here and there. Nothing so major as to needing like a professional help, like a professional credit restoration company or something like that. It's mostly just, look, I can see what's on your credit report. Here are some things that you can do. And there's also these calculators that we usually get through our credit vendors that help us do this as well. They're not 100% accurate. They're kind of like, we hope this happens. This might happen if you do this, this, and this, because even they can't be 100% on it. But one of those things is, hey, let's say you have about 5 credit cards, and you're at a max with one. You've got one that's at 80% of its max, 50% of its max. You've got a couple that are at 30% of their max. Now, what you could do is you could pay down those balances to specific percentage benchmarks. And every one of those that you do, your credit score should improve with that movement, especially if you've had the accounts for a while. If it's a new account, you've had that account for 2 or 3 months, it may not do that much because it doesn't have a lot of history yet. That can be kind of a drawback to that. But it is still possible, and it is still best to get that rating by doing this way and continuing to do it. So those cards that you have at 100% that are almost maxed out, get them down to 70%. 50% if you can. The ones that are at 50%, get them to 30. The ones that are at 30, get them to 10 or less. The best credit rating I have seen on a trade line by getting it paid to a certain point is to get it between, I believe it's not paying it off, it's not paying it to 0, it's getting it down to under 10%, but not 0. So anything between 1 and 9%. It's this really random sweet spot that if you get your balance paid to that, it usually does the most for your scores. Now, you can do a lot of work on any of your trade lines, any of your credit cards, if you get them down to those benchmarks that I mentioned. It seems to be around 70% or 50% or 30%, and then anything below 10% is the cream of the crop. That's where you're going to get the most bang for your buck if you're going to be using some of your assets to go ahead and pay down your credit if you need to improve your credit scores. But this is one of those things that a lot of people don't know. There's a lot more information out there these days than there were, 5 or 6 years ago when it came to credit and trying to improve it without having to reach out to a company and see if they're even legitimate or not, if they can help you. So it's one of those things that once you see what your credit limits are, you have an idea of what you can do and where if you need to get those points up, because the better your scores are, typically it will get you into that range where you can buy, or it'll get you into a spot where your pricing on your interest rate might be better, so that you're going to spend less on that interest rate, or you might be able to get a lower interest rate without much money out of your pocket. A lot of loan programs are based on your FICO scores. So if you're just trying to get high enough to qualify, these things work. If you already qualify but you want to get the best deal you can, these things work. I've seen it work hundreds of times. But that's the trick. That's how you can utilize what credit you do have, leverage it as best you can to get the best scores that you can, and that'll save you even more money in the long run. So I hope you like this content. Please like if you did. Leave a comment down below if you have any questions, as always. And if you haven't, please subscribe for more. And I would love to share any more information I have on these things. I'm going to continue doing a series and talk about credit more. It's just one of those topics that comes up probably the most when people are looking to buy a home. Okay, so that's it. All right, guys, take care. Peace.